So in this video, I walk through the state of the market and the risks that are coming up next. And in future videos, I'm going to be talking about my portfolio positioning and exactly what I'm investing in. So make sure you hit that like button and that subscribe button so that when I do release those videos, you'll be the first to know, because I want to make sure that whatever strategies that I have, I am sharing them with you in my community. Hey investors, we did it. The Dow is now at 34,000. And so the question you're probably asking is, what's next? Well, my name is Larry, and I'm a CFA Charterholder who is totally new to YouTube. I'm an entrepreneur based here in Boston, and what I'm going to do is I'm going to start uploading some videos that include my thoughts on the market. I used to work in investments, and I want to share my perspective on how the market is acting these days. So things are going well, and now that the Dow is at 34,000 and hopefully you're making a lot of money, you're probably going to wonder, is it going to continue higher, or is there going to be a correction coming up soon? And before I get into that, I just want to talk about my investment philosophy, and it's long-term investing with some swing trading opportunities here and there. And so I won't really be talking about day trading or short-term strategies. I'm going to be walking through fundamental analysis and also the perspective of how institutional investors view investing. So let's talk about how the market is reacting these days from a fundamental point of view. The market goes up or down based on future expectations, on how companies are likely to perform. For instance, if investors think that Apple or Microsoft is likely to generate more sales and more profits 12 months from now, 18 months from now, 24 months from now, more than expected, the stock prices are going to rise. And so how are the outlooks for companies these days? Well, truth be told, the outlook is looking pretty good. And the reason the outlook is looking pretty good is that in the past several weeks, the earnings reports that companies have to issue every single quarter, the results have been pretty good. Companies have to come out and talk about their business performance from a sales standpoint, from an expenses standpoint, and also from a profits standpoint. And recently, banks, technology companies, consumer industrials, consumer discretionary, all those industries have been performing very well coming out of the pandemic. So from a fundamental point of view, companies are healthier than ever, certain sectors of course, and the companies that made it through the pandemic are now in a position to really thrive coming out of it. And so with that said, company performance is looking pretty strong. And another consideration of strength that's supporting the market's rally is really tamer than expected inflation reports. So as you probably might have been following, in the past several weeks, the markets have sold off because of this fear of inflation. But recently, the 10-year yield, the 10-year government bond, has actually fallen from its highs. And the reason government bonds and yields are important is that it's one of the core factors that drive Wall Street models. Because when the interest rates rise, there is something called the discounted cash flow, for example, models. And when interest rates rise, the discounted cash flows of the future fall in value. And so what happens is, because yields have been falling, the market's valuation is now, supported, and so that's excellent. Now, the next thing I want to discuss is that Biden's infrastructure bill is also going to support stocks. Now, a lot of people originally thought that Biden's infrastructure bill would hurt the market because it would bring a lot of inflation. But in reality, the infrastructure bill is an incredible opportunity for companies to, for example, build out their developmental plans across the US. Qualcomm, for example, is able to now build out greater infrastructures for 5G, and it's a company that's poised to benefit from the infrastructure bill down the line. And so the infrastructure bill is going to end up helping a lot of companies. So with that said, you're probably thinking, the market's in really good shape. The Dow is now at 34,000. The NASDAQ is back above 14,000. So what are the risks? Well, I'm watching a couple. And you should too. Here are the risks that I'm following. So I'm going to be looking at the leadership of the rally. And the leadership of the rally means, are the indexes, are they being led by just a couple companies that have large market caps like Apple, Microsoft, okay, Tesla? And truth be told, right now, the market is not just being led by several companies, it's being led by many different sectors. You might have remembered that several weeks ago, there was a rotation between growth stocks, okay, and value stocks. There was a lot of fund flows going from value stocks to growth stocks. Watching like the leadership of whether certain companies are taking the markets to the highs, but it's really all sectors, which is good. Some other things that I'm looking at is I'm looking at cryptocurrency. And I'm looking at cryptocurrency because I think that Bitcoin is a proxy for risk, the cryptocurrency sector in general, actually. And what's happening is you'll notice that these days, cryptocurrencies like Ripple, Cardano, all of these cryptocurrencies are actually soaring in value, but they're far, for example, more volatile than Bitcoin. And I view the cryptocurrency industry as a proxy for risk taking. And right now, there is definitely an appetite for risk, as you can see. And the next thing that I'm looking for is commentary from Jay Powell. All his continued commentary and all of his upcoming commentaries on inflation, the job market, the strength of the economy, all that's really important because his position so far, and if you don't know, Jay Powell is the head of the Federal Reserve, and he has the power to really determine where interest rates are going. And every bull market in the past has really died because of high interest rates. Okay, either high interest rates or a weak economy, but a weak economy typically comes from high interest rates. So I'm watching Jay Powell and what he's likely to do in the future. I'm watching his commentary, I'm watching what he's likely to do, because this man can move the market. And right now, he's pretty dovish. I'm going to be watching the data and seeing if he's going to, for example, become more hawkish over time. Hawkish means that he's, has a preference towards raising interest rates. But until then, the market's valuation, even though it's expensive, is probably supported because government yields are so low. So investors, I hope that you continue making money. There are several risks that are emerging down the line, and I'm going to be covering them in the future. But right now, things are looking pretty good. And I hope that, you don't, for example, speculate and continue to, for example, add new money. This is a time when you should continue to hold your existing positions. Adding new money here is probably like a risky thing to do. And I'll be covering this more in the future with more analysis and more commentary. So I'll see you in the next video. Make sure to hit that like button and subscribe, because in future videos, I'm going to be walking through my portfolio holdings and showing you exactly what positions I'm in and explain why I'm investing in those companies. I'll also be talking about what types of investment opportunities might take place in the market. So make sure to hit that like button and subscribe, because I want to be able to share with you my strategies to help you make more money in the stock market. So I'll see you in the next video.